Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now, it's been a huge week for the crypto miners. Many of them are up double digits over the last couple of trading sessions. And with that being said, I thought it was good time to actually provide an update on Marathon Digital Holdings. This is one we initially covered a few months ago. It's one of the biggest players here in North America, and they've really differentiated themselves in terms of their business model compared to a lot of the other miners we cover on the channel. Now, before we get into it, please take a second, hit the like button, you guys. It's a huge help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to do so. And let me know in the comment section below if you're currently holding shares of Marathon, how you think they stack up to some of the other players like Hut 8, Hive, Bitfarms, Riot, and what your thoughts are on their business model moving forward. Now, with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we're going to be covering Marathon Digital Holdings. Now, I've been on a little bit of a Bitcoin kick over the last couple of weeks. We've been covering a lot of these companies on the channel, looking through their investor presentations, and Marathon was flagged as one of the most efficient miners in the space. So I thought it was time we get an update video out about this company. You can see a super strong week for the Bitcoin miners. I think a lot of this really has to do with the change in leadership we've seen in the UK. So the incoming Prime Minister, Rishi Sunak, is known to be a huge advocate of cryptocurrency and Bitcoin. So this should be a big catalyst for the industry. And you can see on Tuesday, so this is as of close, Tuesday, October 25th, we saw a massive jump. Hut 8 mining was up nearly 20%. Marathon was up nearly $2 or 14.5% on the day to close out just shy of $15. You can see in after hours, they did pull back a little bit. So it'll be interesting to see how this story continues to play out throughout the week. Now, if we look at a 6-month graph here, you can see Marathon, similar to the other miners, has really been following the underlying price of Bitcoin quite closely. We hit a low back at the end of June of about $5.34 and a high towards the middle of August of $18.24. Now, Marathon is by far the largest company we cover on the channel in the Bitcoin mining space. You can see market cap on this one about $1.7 billion. And that's really why I'm so excited about some of these junior miners that we cover, specifically Bitfarms and Hut 8. As we're going to see throughout today's presentation, when we look at the hash rate, we look at the reserve that Marathon has compared to some of these smaller miners, I definitely think there's a lot of value to be unlocked, specifically with Hut 8 mining. Now, that being said, that doesn't mean Marathon is a bad pick, you guys. This is definitely a dominant player in the industry. They have huge growth plans over the next couple of quarters, as we're going to talk about, and a really interesting investor presentation with a lot of key takeaways that I wanted to discuss in today's video. And with that being said, I wanted to kick things off with Marathon's monthly production and mining operational update for the month of September. The other thing I wanted to point out here, if you look at my watch list, you guys, whether we're talking about Marathon, CleanSpark, Riot, Hut 8 mining down here, you can see a phenomenal day. Cosmos Group Holdings, another one that I follow closely on the channel, was up nearly 50%. So a great day for the portfolio, and specifically the Bitcoin or Bitcoin mining related companies, which were all up in excess of 10 to 15%. Now, back to Marathon here, you can see they produced 360 Bitcoin in the month of September, 616 for Q3 holistically. So really, this was quite surprising to me considering their market cap, you guys. Again, as a reminder, Hut 8 mining, with a market cap of about $400 million, was able to generate 277 Bitcoin in the month of September, and Bitfarms came in at 481, and they've got a market cap in the $200 to $300 million range. Now, the real differentiator here is actual Bitcoin reserve, or Marathon Digital's Bitcoin holdings. You can see that was up to 10,670 Bitcoin with a fair market value in excess of $207 million. So that's definitely where a lot of this market cap is really derived, you guys. This is by far the biggest reserve of any of the companies that I cover on my channel. Even when you compare it to Hut 8 mining, who has the largest reserve of self-mined Bitcoin, they're coming in around 8,000. So I think a lot of investors are really looking at Marathon as a play on Bitcoin itself, or a Bitcoin ETF, so to speak, because they've got such a large portion of their market cap tied up in this reserve. So that was really encouraging to see. As you guys know, my number one position in the crypto space is Hut 8 mining. They also have a big focus on their hold on for dear life strategy and increasing that Bitcoin reserve. So it's great to see that the broader market and the investment community really assigns a lot of value to these type of companies that have put a big focus on their reserve holdings. Now we're going to talk about a lot of pieces of this article throughout the presentation, but a couple things I wanted to call out here, you guys. So as of October 5th, their fleet of miners consisted of about 57,000 units, and they're sitting at a hash rate of 5.7 exahash per second. So that's important to keep in mind. That's well ahead of Bitfarms and Hut 8 mining, you guys. So again, high growth potential for Marathon moving forward. Now, the other thing worth mentioning in this article relates to their Compute North co-location facility. So you can see on September 22nd, Compute North, which is one of Marathon's hosting providers, filed for restructuring under Chapter 11 of the US Bankruptcy Code. So this is definitely a concern and really a problem with Marathon's business model, you guys. So while a lot of the other miners have focused on vertical integration and actually owning the facilities in which they mine Bitcoin in, Marathon has really focused on leasing out space or co-locating their facilities with other data center organizations. And the problem with that is a lack of control, and exactly what we're seeing here. So Compute North has filed for bankruptcy. Marathon uses their facility to mine Bitcoin, and obviously that could present a challenge for the Marathon Digital team. Now, luckily, the Compute North entity associated with both the King Mountain and Wolf Hollow site, which is where Marathon is located, are not directly subject to the Chapter 11 process, and as a result, Marathon has not experienced any significant negative impacts on its operations at King Mountain, where their miners continue to be energized according to schedule. Now, at the Wolf Hollow location, the company has experienced some delays, which Compute North has attributed to a regulatory matter. And you can see here, Marathon actually has financial exposure to Compute North as well, which includes $10 million in convertible preferred stock and $21.3 million related to an unsecured senior promissory note with Compute North Limited Liability Corporation. And on top of that, Marathon has also paid approximately $50 million in operating deposits to Compute North as an entity. So this is really something we focused on in my initial coverage on Marathon Digital, comparing and contrasting their business model and strategy to others who are really focused on that vertical integration. Marathon made a very strong case for the ability to scale and the lower cost model associated with leasing or co-locating. However, you do have some negatives, and this is exactly what we're seeing here, which may or may not result in additional impacts to Marathon's operations. So for me personally, I like the security of the vertically integrated model and the fact that companies like Riot, Hut 8, and Bitfarms actually own their means of production. Now with that being said, I wanted to jump over to the Marathon Digital Holdings corporate website. I'll leave a link in the video description below, give you guys a quick refresher on what this company is all about, the way that they've differentiated themselves, and then jump into their investor presentation, which again I thought was super strong, you guys. I look at a lot of these investor decks, and Marathon definitely had some very compelling slides. So at Marathon, we aim to facilitate greater transparency, financial inclusion, and economic freedom by enhancing the development and security of the world's first public blockchain ledger, one block at a time, that being Bitcoin. We believe in a more open, inclusive, and fair financial system, and we believe Bitcoin is the key to making it happen, which I would tend to agree with. Now, they then go on to talk about how they've differentiated themselves from some of the other miners, which we just alluded to. So at Marathon, we're different. We're currently in the process of building one of the largest, most agile, and most sustainably powered Bitcoin server operations in North America. So that's that high growth potential I talked about in the intro, while remaining asset light. Rather than building and operating data centers like some of the competitors, we focus on increasing our computing power, also known as hash rate, and becoming more energy efficient while staying lean and staying green. A key component of our strategy is to co-locate our operations at sustainable energy sites when feasible to ensure our power source is sustainable as possible and to reduce stresses placed on our electrical grid infrastructure. So again, specifically calling out that co-locate strategy and the fact that they don't actually own their own infrastructure. So the benefit here is lower upfront costs, lower capital costs, and lower overhead. However, the downside is you're giving up some of that control, and you can run into trouble if any of these partners aren't operating their business to the same standard that Marathon would expect. Now, this slide here is really a great continuation of that point. So you can see their strategy is to invest in miners over infrastructure and prioritize efficiency and minimize cost. And that's exactly why we saw in the other video covering Riot, Marathon's actually ranked number one in the industry in terms of exahash efficiency and cost per Bitcoin. Now this is where it gets really exciting. So you can see in September of this year, so last month, they were sitting at 3.7 exahash per second. We already saw that grow in excess of 4.6 exahash as we moved into October. But by mid 2023, you guys, they're expecting to have 23 exahash per second online and fully deployed, which is a 6x increase from what we saw in Q3 of this year. And you can see the growth here by Q4. They're expecting 11.5 exahash per second. Q1 is 13.4 exahash per second. And by the middle of next year, that mind-blowing 23 exahash per second. So when you compare that to the growth plans of even some of the more aggressive miners like Bitfarms, it's miles ahead, and it really will solidify Marathon's position as one of the top and largest scale crypto mining organizations in the world. Now, in terms of the location of these facilities, again, all focused in the United States here, you guys. You can see they're currently working with a number of different partners to host these facilities. So Compute North, the one that's filing for bankruptcy, is focused in McNallie, Texas and Granbury, Texas, representing a total of about 10.2 exahash per second or 280 megawatt capacity. They've got two facilities hosted by Applied Blockchain, one in Ellendale, North Dakota, which is about 8 exahash per second, and one in Garden City, Texas, which is about 4.2 exahash per second. And then two other facilities, one in Ohio and another one in Texas, which are hosted by other providers, which are considerably smaller and represent a combined total of about 12 megawatts of capacity. So you are getting some geographic diversification, but all focused in the United States of America, which, as we've talked about in previous videos, could either be a major plus or negative depending how the political landscape changes in the United States and how the crypto or Bitcoin mining legislation continues to evolve. And this slide here really beefs out that asset-light business model, talking about some of the pros here. So you can see co-locating at renewable energy sites results in a decreased dependency on a fluctuating energy grid. They can benefit from selling excess power back into the grid. And because they're operating what's known as behind the grid, they're not actually competing with direct consumers. Now, Marathon also believes this provides increased flexibility, the ability to move servers to different sites with better economics, no long-term ties to real estate or geographic locations, and gives them that diversification we talked about on the prior slide. And in turn, that allows them to optimize ROI or return on investment and their capital expenditures or CapEx. Now, what they don't mention here is if one of these partners goes bankrupt, that can obviously have a major negative effect on the business's operation. Now, the next couple slides don't directly relate to Marathon, but I thought they were super interesting for anyone who's invested in this space, including myself. So this one here lays out a couple of different scenarios ranging from a bear case to a bull case for Marathon over the next few years. So this assumes we're in 2023, all 23 exahash per second of miners are installed and online. And you can see in the bear case, you guys, the price of Bitcoin really doesn't move from where it's at today. It's about $19,000 US. As a result, the total network's hash rate is a little bit lower because there's not as much interest in the space. So Marathon would represent 7.9% of the total Bitcoin network hash rate. So again, when you talk about scale here, you guys, they're taking almost 10% of the entire industry. Now, if they're able to produce 70 Bitcoin per day, that would work out to 2,200 per month or about 26,000 Bitcoin per year, which even in a bear case scenario would result in $500 million or $500 million in revenue each and every year. Now, if we move over to the bull case, you guys, the price of Bitcoin essentially doubles from here. So you're sitting at about $39,000 US. The network hash rate would increase in this scenario because more and more people are interested in mining Bitcoin. So we're looking at a total hash rate on the network of about 356 exahash per second. So therefore, Marathon would control about 6.4% of that total network hash rate. Now, in this scenario, because it's a little bit more difficult and more people competing, they're only mining about 57 Bitcoin per day or 21,000 per year. But because of the increased price, you're looking at revenue of about $820 million. And I personally think the price of Bitcoin could be substantially higher by the end of 2023. Now, the base case is somewhere in the middle. You guys can go through the numbers here for yourself, but I thought this was super interesting. Again, even if we don't see a move in the price of Bitcoin, $500 million of annualized revenue is phenomenal, and they'll be adding about 26,000 Bitcoin per year to their reserve, which when we see the price in Bitcoin appreciate, which I think will definitely happen within the next 12, 24, 36 months, they're going to be sitting on a literal gold mine of Bitcoin here, you guys, with one of the biggest reserves of any publicly traded company in the world. Now this slide here, again, super interesting, compares Bitcoin adoption to the internet user growth we saw in the 1990s and early 2000s. So you can see this graph here showing the comparison of these two technologies. Bitcoin adoption is growing faster than the internet adoption did, with nearly 1 billion users expected by 2025. The next visual here shows the amount of transactions when comparing Bitcoin to Visa over the last few years. So you can see in 2017, Visa did a total of $10.5 trillion worth of transactions, while Bitcoin only did 2.8. But if you fast forward only 4 years to 2021, Bitcoin actually outpaced Visa, you guys. So Visa is one of the biggest payment companies in the entire world. They did $13 trillion worth of transactions in 2021, and Bitcoin did 13.1 trillion. So again, a major bullish case for the adoption of Bitcoin and crypto around the world. And we're now seeing in excess of 45% of on-chain transactions representing value in excess of $10 million, which indicates increased institutional activity. So what this means is the size of transactions we're seeing as the years continue to go on are increasing from small retail transactions to large scale $10 million plus transactions, which generally individuals would not do or have the capacity to do, meaning that more and more institutions are now getting involved in Bitcoin and cryptocurrency. And this is really one of the main reasons I'm so bullish on this sector, you guys, is we're starting to hit that critical mass where widespread adoption is imminent. And in my personal opinion, we're going to start to see explosive growth in this sector overall. Now this slide here gives some additional context into these Bitcoin halving events, which we recently talked about on the channel. You can see the block reward is reduced by half every 210,000 blocks until all 21 million Bitcoin are mined. So a fixed cap, which is expected to occur around the year 2140. What was interesting to me on this slide, you guys, is I didn't realize how big a percentage of Bitcoin has already been mined. So you can see by the end of 2020, which was the last halving event, 93.75% of the total 21 million Bitcoin had already been mined. Now they expect the next halving to occur between February and May of 2024. And at that point, nearly 97% of all Bitcoin that's ever going to be available will already be mined. So although these companies are ramping up and increasing their scale and capacity super aggressively, it's really quite shocking how small of a piece of pie they're actually competing over when you look at the total 100% ecosystem of Bitcoin. And you can see by 2140, that's when they expect to mine the last Bitcoin or have 100% of the 21 million Bitcoin out in circulation. Now, the other thing to keep in mind is a lot of this Bitcoin has been lost over the years. People have forgot their passwords. They've thrown out the computers. So there's not truly going to be 21 million Bitcoin available, which reduces the supply even further. And if you know about supply and demand, you guys, the lower the supply, the higher the demand. And you can see they also make reference to the actual price jumps we see in Bitcoin through these halving events historically. So the last slide I wanted to leave you guys with today is this one talking about Bitcoin compared to traditional assets and the return on investment. So a lot of people obviously compare Bitcoin to gold or a digital version of gold. And then the other main asset class here is the S&P or traditional equities. Now, a lot of people have scrutinized Bitcoin saying it's super volatile, it's all over the place, you can't rely on this investment. However, if you zoom out a little bit here, you guys, and you actually look at the ROI of Bitcoin compared to gold or the S&P index, at anything over a 2-year interval, it's actually outperformed substantially. So your 2-year return on investment with Bitcoin is 65%, 200% over 4 years, 7,000% over 7 years, and 163,000% if you've held Bitcoin for the last 10 years, which absolutely blows any of these other asset classes out of the water. So people who use that argument, you guys, are focused on the short term. They're looking at the 1-year price movement or volatility in Bitcoin. Yes, Bitcoin is down 71% this year or in that neighborhood compared to gold, which has only lost 8%, or the S&P, which is only down 18%. seen. But if you're in this for the long run, you're looking out 5-10 years, the trend and the pattern becomes super evident. Now, obviously, history doesn't guarantee future gains, but I would be very surprised if this 10-year trend all of a sudden reversed as we're starting to see that massive adoption of Bitcoin and cryptocurrency by the general public, and more importantly, by institutions. So that's just something to think about, not Marathon specific, but for anyone who's considering investing in the Bitcoin or crypto space. If you step back, you guys, you zoom out, I definitely think there's a strong case to be made for this technology and for the utility of Bitcoin moving forward. Now, with that being said, I'd be super curious to hear your thoughts in the comment section below. Are you holding shares of Marathon? What do you think about their business model compared to some of the other vertically integrated miners? And what are your thoughts on these last couple slides, which talk about the industry overall? If you're still watching the video at this point, hopefully you found some value, so make sure you hit the like button. And if you're not currently subscribed to the channel, McNallie Money, feel free to do so. That's all for now. Thanks for watching, and we'll see you in the next video.